for a little opening bell weekly recap. How's everybody doing today? I'm just going to hit the channels and say we're live. So, live on YouTube. All right, one channel down, two channels down. Let's go. Risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose, whether you're trading stocks, options, futures, forex, cryptos, whatever assets you decide to trade out there, you know the risks. Follow me on social media. Best outlets, youtube.com/Chris Pulver and Twitter @RealChrisPulver. A couple of tweets this week on the Euro Swiss outlook for the year. And we're going to talk about everything today. It is opening bell. So let's go. Let's get into the charts. I want to start off with the SPY. Pre-market was down this morning. We did survive the inflation data this Thursday. It pretty much came in as expected. The market tried to rally, which it did. I mean, you can see the long wick to the south yesterday, but there's a very cooperative bear channel resistance level. Plus, we're at the 200 EMA on the daily time frame. So, you know, it's a bit of a tall order. I said on Monday during the outlook that, you know, getting back to the 200 EMA, remaining in the sell zone, I'm still, you know, directionally kind of bearish on the market. Doesn't mean that I'm selling everything. It just means that I'm using, you know, this little melt up as an opportunity to protect profit. All right, so there's not a lot to disturb the market unless we're just going to tank prior to FOMC next, not next week, but the week after. Well, actually, 2 weeks, right? It's February 1st, so we still have potentially a couple of weeks of a melt up. So getting through next week, getting through the week after, and then February 1st, which is a weird time to have FOMC, the first Friday or Wednesday, the first Wednesday of the month, and then we have what was in my head was non-farm payroll on Friday. So let's go to the calendar really quickly and verify that week. Let me go to something else here as well. I'm going to check on something. Yes. Yes. Okay. Let's go to high impact news only, and we'll go to next week. So Chinese GDP, employment news out of the UK, CPI for Canada. That's going to be a fun little session. So we stayed out of the dollar crosses yesterday. It was just a lot of noise. We had a big spike down, big spike up, or vice versa. Everything just kind of stayed through the hour and a half session we ran. Everything pretty much stayed boxed in, and I think it was good. Plus we have good positions running as far as Swiss pairs, and if anybody's still looking for some yen strength, that balance is happening. So with the BOJ policy potentially shifting, it's getting priced in. Levels that are really important, you can take a really simple look at the dollar yen, and I've got a Fibonacci right here, 127.20. Okay, and we're trading at 128.07. So, really all I looked at the first big target was finding a high, pulling back into this 38% zone. That's why it's boxed in with green. But if we're just going to see equilibrium, which is a 50% pullback, it's right there, 127.20. Now, the reality is where this broke out around 118.50, if this is going to come all the way back down, leave it to the Japanese yen to do exactly what it should do from the technicals, which is find that breakout point, because this whole thing was an irrational move. But to go from 118 all the way to 150 plus, let's just say 120 to 150, that's a 3,000 pip move, and then to see it go 3,000 pips the other way. Doesn't really matter. Give it time, and the market cooperates. And I can attest that in here it seems like, oh my gosh, this market's never going to cooperate. But when it turned over and rolled over, guess what? There you go. So there's some trading opportunities. A lot of it's BOJ infused. They're changing their stance on the 10-year. Which is trading right now at 0.53% and potentially room to run. But the big breakout point was when this happened. We had 3 levels of intervention during 2022. The BOJ has loosened up on that protective 0.25 yield. So when they're letting it run to the upside, that's allowing the Bank of Japan stance to change, possibly monetary policy changing. If they do, raise rates off of negative 0.1% and get into like the Swiss National Bank, they were at 0.75 negative, and then went to 0.5 positive. Now they're at plus 1% positive. So if we see the BOJ adopt a similar stance and start to raise interest rates, that changes the landscape quite a bit. If we go to cbrates.com, we talked a lot about this week. I know that if I just here, I'll find a screenshot here. Let me find a screenshot. So just taking, I think I posted it in my Twitter this week. I know that I did actually because I was so excited about it. Yes, that's good. 112, little triple rollover action. Yeah, all right. So let me grab the screenshot. I'll pull it up on my email here in just a moment. There we go. So done. Save the photos. And then I will email this to myself. Okay. All right. And it's time for Benji to say hello. cbrates.com. By the way, let me log into YouTube and say hi to everybody. All right. Skip the ads. There we go. Morning, Tom. Morning, Tony. Morning, Ruth Ann. Morning, Brad. How we doing? Morning, Rex. Morning, Denise. David's here. Angelina's here. Katrina's here. Happy Friday indeed. Moch is here. Tom, good morning. Everett, good morning. Kevin, what's happening? Tarek, good morning. All right. Morning, Linda. Catherine, good morning. Blanche, Jan, Scott, what's happening? Robert. All right, now we're live. Mikey, what's up? Nice to see everybody. Okay, central banks. Let's get off these. What are we looking at here? Is this Allbirds? Come on, Allbirds. Take it easy. You'd almost think that I'm on their website versus looking at what I want to look at, which is central bank rates. So let's have a look at the majors. So we're at 3.1% for the Australian dollar. We are at 2.5% for the euro. We are at 4.25 for the New Zealand dollar, aka the Kiwi. We are sitting at 1% for the Swiss. I skipped the JPY, is still at negative 1%, negative 0.1%, right there. We have the UK at 3.5%, and we have the US dollar at 4.25 to 4.5. So we know that February 1st is the FOMC rate decision, and more than likely, let me see if I can go back and circle both of those at the bottom. Yeah, let's do UK and dollar right here. So 3.5 for the UK, 4.25 to 4.5 for the US dollar. We're looking at 2 additional rate hikes on the US dollar, or for the central bank of the US, the Fed. That would come February 1st and March 22nd, I believe. So if you take a look at this, you notice how the last rate hike, this was back in December, up. Eurozone back in December, up. The Bank of Japan has stayed the same since 2016. They've been at negative 0.1% since 2016. We've had the Swiss National Bank at negative 0.75 since 2015. So those were big key central banks to start changing rates, like the Swiss when they went to positive territory. Still, I like the differential, and that's starting to be enjoyed by traders now, which is what I was really excited about this week. I posted it on Twitter. Let me go into my Twitter account, show everybody. My Twitter handle's at real Chris Pulver. I also started a Substack. I haven't started blogging yet, but I'll start doing that more frequently, just to get some stuff out there. And posted. Oh, there's my live session. I was like, wait, that looks familiar. I posted this on the Euro Swiss. Take a look at that one today. Also posted positive swap. This is what I was talking about. So right here. This is just one of my accounts. Rollover, rollover, rollover. Getting paid to hold positions. Thank you, positive rollover. A lot of this is, technically for the last year, I've been beating the drum on a Swiss franc that's weaker, and we're starting to see it a little bit. If it pops up with my currency strength, if there's a way that I could go back and see the whole week, I mean, we had the Swiss very weak earlier, like Tuesday, Wednesday this week, which was really nice. and that helped us see some currencies pop really to the upside. Euro Swiss, for example, which, by the way, let me pull Euro Swiss, and 1 hour, I'm going to add in. We've got the daily pivot here. I've got a pending order at this daily pivot. I'm going to buy. Yeah, I'll throw in another small buy trade. Let me get logged in. Actually, I just do it on my phone. 1.0048. Okay, so Euro Swiss, small buy trade at the pivot 03, buy at market. There we go. Okay, so I just threw in a small buy trade there at today's pivot. I said I was going to do that this week, and I am. So let that load up. So I have a pending buy right here. I have a pending buy right here on this breakout point. I put in a market order today, and the bigger picture is I'm looking for, let's go to the daily time frame. Okay, we're breaking back up into this buy zone. You know, everything's above the 200 EMA. We broke out above this level here. I'm looking for a couple of levels. We're just shy of the 127 right now. We have the 1618 extension. We have this big pocket level, or a harmonic merge on a monthly time frame at 1.0488. We have these highs back here at 105. So between this exact pocket, which is around 103.50, and these highs at 105.10, that is a really nice profit window. We still have a missed pivot from 2022 at 106.10 that hasn't been hit. So if we're just looking at a measured move, you know, this measured move here, if I projected, so at the 382, that projects us all the way up towards a 1618, which is way up here. But again, I'm probably going to take some profit given the resistance in here, the pocket in here, just to be on the safe side. If we have a multi-year pattern setting up, let's say that this just takes its time, but makes its way up into that high, right? This could be a left shoulder. This could be the head to neckline, and this could be the right shoulder. So if we make our way up to a neckline, I think that's a good level for profit protection. We pull back into a right shoulder, we start looking for accumulation, and we have a multi-year pattern that sets in a low. You know, that measured move, let's say from 94 up to 105, that's 1,000 pips. If we have a pullback to around 1.00, and we go another 1,000 pips on that symmetry, that puts us back up towards a move around 110 to 111. And larger term, you know, there's a massive level at 120. I'm curious if that 120 level ever gets hit again and becomes kind of the exchange rate that was so famous for the big break in 2015. Okay. Yep. Wednesday the 1st is FOMC. Thanks for posting that, Tarek. Tom, good morning. Yeah, so I want to go to the calendar here. I know that we have FOMC on Wednesday. What I was looking for is, do we have a double whammy of FOMC on Wednesday and non-farm payroll on Friday? So if we go to next week's trading, I'm looking to see what's exciting for us in Flex. So we have early morning employment for the pound. We have CPI for the, so we'll trade the CAD basket on Tuesday morning for Flex. We've got the BOJ outlook and policy statement, which a lot of that seems to be on the move already. You know, if the BOJ is going to say something like, "Yep, we're willing to let the rates run," or if they have a target rate on that JP 10-year, possibly, right? I mean, it's usually this is the toughest one to trade because it's like 11 p.m. to 2 a.m. It's like a 3 to 4 hour window. It just kind of blends the Asian and London sessions. But clearly, there's some words being said by the BOJ that has the market on the move. We have CPI data coming out of the UK Wednesday morning. We have retail sales and producer price index for the U.S. on Wednesday morning at 8:30. We can look at some dollar crosses there as well, so we can trade CAD CPI on Tuesday. We can look at dollar pairs on Wednesday. Also, let me pull up an interesting email. This one. It's just some research that I look at, and they have some discussion around the dollar. Let's see here. So right in here, see if I can pull this chart up. Everybody see this? So this is from the St. Louis Fed. Okay, Federal Reserve economic data, FRED, nominal dollar index 2006 to present. It's just really interesting to look at the peak to trough. Okay, declined to 2011. We had a 19% dip in the dollar. We had a 10% dip in the dollar. We had a 13% dip in the dollar. Today we've had a 6% dip in the dollar. So point is, I mean, let's just say over the last 15, 16 years, let's take the average. Okay, let's take the average. So we have a 19% decline, a 10% decline, 13% decline, and let's just take the average there divided by how many data points? 1, 2, 3 divided by 3. So the average is 14%. All right. So if we see a 14% decline, that means that there's another 8% to the downside on this dollar. So what's interesting though is looking at 2008, looking at 2011, 12. This was a double bottom. Looking at this low here compared to this low here, you know, I am curious if a 14% decline, or let's say a 12 to 14% decline in the dollar gets us to a higher low. Right? I mean, we're having this slight angle upwards, a slight angle upwards. We could just have a big channel rolling on the dollar. So we might be looking at that technically where the dollar index may weaken still. And the good thing is, we've had some profits running on Aussie dollar, New Zealand dollar, Euro dollar hit that 108.50 level. We might push up into 109 or 110. I'm just, I'm a little cautious on permanent dollar weakness. I think that with the Fed raising rates, I think the carry trade is a big deal for 2013. I think that's a theme that traders should be paying attention to. I certainly know that I am. So I just think that, with the dollar sitting at 4.25, 4.5, close to 5% by March or May, then it's going to be enticing to see that. I don't know if other central banks are going to aggressively raise. If Switzerland doesn't raise rates, dollar Swiss is a great carry trade. If the yen, doesn't raise rates, dollar yen is a great carry trade. But don't let some of these technicals fool us. I mean, look, don't think for a second that just because it's positive swap doesn't mean like, oh, I'll buy the dollar yen right now. I mean, this dollar yen can legitimately drop all the way back down to 118, find this initial breakout point. We go up 3,000 pips, we go down 3,000 pips. I mean, I wouldn't touch this dollar yen long until this trend line breaks right here. So if we go down, pause, down again, pause, down again, pause, I'm looking for a bottom in here, and then we have a big potential move back to the upside. And I'd much rather be involved in a move like that with patience and confirmation than trying to say, oh, this Chris guy's talking about positive swap. Let's just go ahead and buy it now because it's a 4.25% move versus a negative 0.1% move. I mean, that's great. But if the BOJ is changing its stance and all of a sudden this changes, but our volatility is shifting aggressively to the downside, I mean, look, this could drop another 700 to 800 pips, possibly more. So the last thing I want to do is start buying for positive swap and watch the price go against me. But on a currency pair like dollar Swiss, way more interested in holding, right? We're stable here around this 92.90 handle. We have pretty solid alignments to get back to this monthly pivot, get back into this pocket area. Even if we go a little bit lower and have a further decline, I'm looking for that type of move back up into range highs. So I can position myself accordingly to dollar cost average in or level in to the dollar Swiss. Look at this 9,000 handle, take it back up to this 96 to 98 handle. Big difference in setups technically, right? Euro dollar. If the euro dollar comes back into the the 109 to 110 handle, we have this big swing, right, from high to low. So if we go from this high all the way to this low and the market pulls back about 50%, that puts us around 110, right? Can we come back to 110? Can we see some resistance? Can we align some confirmation and then start to short that? Sure. Doesn't mean we're going all the way back down, but if we go from this low to, let's say, a halfway point high and we pull back again halfway, I mean, that's a good spot to take some profit. If it goes all the way back down, so be it. I don't know. But if at least we get some direction from 110 back to, say, 106 or 105, I would take that trade with confirmation, right? If we go to the dollar index, let's go to these measure moves that we've been seeing, right? Let's go to the weekly time frame. Let's go back to these big declines. So percentage-wise, let's look at, I mean, this is crazy. From high to low, that's a 48% drop in the dollar. They were talking about these since 2006, so that would take us back into this area. So 2006, we have a drop here of around 16%. I'm literally measuring the same thing I just showed you, right? There's a 19% drop from peak to trough. There's a 10% move. There's 13%. Presently, we're at 6. So let's measure let's measure currently. Let's see what 10 to 15% looks like. Okay, let's see what 10 to 15% looks like. I'm just going to guess. I'm going to guess that it's probably very close to the 200 EMA. I mean, thinking about these automated trend lines, the way these are calculated, a 200 period weekly chart, if we go from this high to low, from this wick high, I mean, that 200 EMA is sitting at 14%. So for me, if there's still a decline into this 200 EMA, we got to be prepared for more dollar weakness, which is okay, right? Dollar weakness is fine. It's, in fact, I mean, against the Aussie, against the New Zealand, I think dollar weakness is welcomed, right? Even against the euro for the next couple hundred pips. But if I'm looking at this 200 EMA, I'm looking at these slightly higher lows. Let's go back here and let's look at this. So could we see a higher low situation? If I take this area, I mean, that doesn't really project a channel the way that I'd like to see it. So potentially higher lows. If I connect the dots down here, that's way out there. So, I mean, it really just, it kind of threw everything off. You know, I mean, this is odd, right? We have such a massive resistance level here at 120, and we decided to turn at 115. You know, now I get it. Like, there's a huge supply zone here. That was the inefficiency, and so it found it and turned on pretty much perfectly to the pip. Uh, but point is, on the weekly time frame, 14%. Okay, 14%, which rivals those averages, gets us back into the weekly 200 EMA. So from there, do we end up seeing some dollar strength and resiliency? Now, think about it. We could go high, low on the dollar, pull back halfway, and then resume a downtrend, right? We might see more of a downtrend happening on the dollar, but I do think a correction is likely. So, in a correction with the Fed having, you know, one of the highest yields in all the majors, it's tough not to get at least give the dollar some love in the near term. Okay. But anyway, I think there's more decline, and so let that happen. I'm trying to limit the exposure. The only dollar pair that I have running right now is dollar Swiss. That's the only dollar strength position I have. The only other dollar position I have with dollar Swiss is New Zealand dollar, and that's long, which I think New Zealand dollar still has some upside potential, right? So if this is putting in a bottom, we have these equal COVID lows. If we have a head and shoulders trade right here, then we could be looking at a break back up. That additional decline in the dollar could push this, project this back into an FOMC pocket, which is around 67. We could get back to this high in this pivot around 7,000. We have this range level around 74. So if we have some big bottom patterns, left shoulder, head to neckline, consolidate for a bit of a right shoulder, create a neckline, we break above here, I think this looks pretty promising. New Zealand Swiss also has a nice little head and shoulders trade that I'm watching closely. Okay. Euro Swiss target take profit, Thomas. That is 10. I've said it like every day for like 6 months. 103.50. Okay, 103.50 is my first big target. 103.50 is right here to fill this pocket, and the highs are on 105. So, again, it's not a perfect, precise one price takes it all, but between 103.50 and 105, anything inside this window I think is acceptable. Okay. I'm not sure why it shows MetaTrader 4. Hang on. That's weird. Unless we're way behind. That's weird. Are we way behind? Hang on. I don't know. I'm just going to keep going. I feel like there's some lag in my YouTube, but I'm catching comments. Let's see here. How many use my analysis for their own trading services? I don't know. I mean, whatever. Who cares? Good luck. I mean, look, I'm just here to help, I wouldn't mind, like I said, I mean, Substack and doing some more newsletter stuff, get some more content out there. I mean, I thought about taking the YouTube channel private and doing, a little Patreon action, but I don't know. I'm not there yet. It's like I do it twice a week. You know, it's not like my big motivation is to charge people for YouTube. It's like YouTube is great educational content. I'm happy to be on the channel. And you know, would I like to make a bit more dollars on YouTube? Sure. Would I like a bigger following? Sure. We're at 5.6 thousand, you know, people, so 5,600 followers, which is great. And hopefully it continues to climb and people find me, you know, but it's like I'm just going to keep pushing good content, good analysis, and I hope it helps. All I can ask from you is if the stuff is good, click the thumbs up button. You're in here live. We've got, you know, 75, 80 people watching. Let's try to get 75 to 80 likes. You know, at least saturate the algorithm so it's like, hey, every follow this guy has is liking his content. I mean, that goes a long way, right? So I do appreciate that. Okay. So Thomas, you get on that target 103.50 to 105. That's my big window. And just in the bigger picture, if we're going to put in this multi-year low, this resistance here could be that kind of perfect crown or neckline area. Where we come back to 105, then we pull back and we see another accumulation zone. Then we have this bigger move to the upside. So this first leg right here, okay, this first leg is what I'm after for profit. I turn that to profit, I'm really happy. Okay, my next leg would be accumulating positions in here for another leg over the next maybe 12 to 24 months. But with this break above the 200 EMA, hopefully we're going to sustain that move and get all the way up towards 103.50 to 105. Okay, so let's talk stocks for a second. I did some simple number crunching this week and looked at the portfolio. I have it's a pretty small list. I think I can regurgitate most of it, but it's basically Netflix. We're trading at 335 and just running higher. I have a covered call at 305. I'm forfeiting some of the profit to the upside, but the reality is I'm still going to make 25 bucks a share and get $84,000 in margin back, so I can't complain. We do have earnings on Netflix next week on the 18th, which is why I didn't roll this. I was super tempted to roll it again, and I might do it. I might look at doing it. It just depends on what I can get for this covered call. If I roll this out to next week and roll this out to the 20th, that means I'm going to take earnings on the chin. If earnings is positive, again, this could be interesting. Earnings is on Wednesday. If we have earnings that are positive and this pushes up, there's very little chance that I'm going to pull back to 305. Okay. Now, if I get $10 or $15, maybe that's worth it to get 265, right? 265 break even or 270 break even with a stock get called away at 305. Let me see. I can look actually right now. Let me log into Schwab and let's talk about it. Oh fudge! It's time to go. I guess that's what happens when you start at opening bell. All right. Well, I guess I'll carry this over to opening bell. Thanks for letting me know. Consumer sentiment came out 64 versus 60. That's fine. So let me just take one more minute to wrap things up. Okay. Monday we'll be back at 9 a.m. for not opening bell, weekly outlook. Monday morning at 9 o'clock Eastern time. I'm gonna try to stick to Friday at like 9:30. I typically play basketball Friday mornings, which gives me time to get back from the gym. And I just, that's like I don't want to have to schedule the session at 9 and then push it to 9:30. I'd rather just say let's do opening bell Friday, a little weekly recap. But Monday will be 9 a.m. Tuesday, Wednesday, Thursday for the flex room. Equities on demand all day, every day, and for 5 days a week, of course, Monday through Friday. So we have class right now. But again, the big theme this week: positive rollover in forex, big positions. Expect the dollar to get a little bit weaker, right? If we just come back and hit those respective averages over the last 16 years, we're probably going to get into double-digit declines. So, I mean, we're still getting a melt up. This is beyond capital chart. I'm going up at $17. My 20 by 15 credit spread should be in profit. We're going to talk about that one today in class. A melt up is good, right? Melt up is good. I suspect this could happen over the next couple weeks before the Fed raises rates in February. Here we are at 395 holding green. Just make a note, okay? We're at the 200 EMA on the daily. There is bear resistance heavy at 410 on the SPY. I do not think the SPY is going to break above 410. Okay. And again, I'm not saying that that's a guarantee. I'm saying that this resistance is now. We may have a melt up into this area, but to me, this has hedge and bear trap written all over it. I will be shorting the SPY at 410. All right. If we have a respective move and an equal high on the Qs, I will short the Qs as well. Now, I am totally willing to take that risk. And I said this week in Equities on Demand. If I'm wrong, if this goes up and goes higher, my entire portfolio benefits from a higher move. My hedge will be a small risk, right? If we did a credit spread and we can collect, $3 out of a $5 spread, or collect, 70 cents out of a dollar spread, I'll take that small risk. And if the entire portfolio goes up, we're going to get paid on that, and we'll just take those small losses. Because if we're right on the bearish direction, then we make some money on the way back down, and we just continue to protect and lower our cost basis on the overall portfolio. Okay. So I'm not convinced the Bulls have control yet. I think that we could have a little bit more of a melt up situation the next couple of weeks before the Fed raises rates. The probability of the Fed raising rates is very high. We go to CME Watch tool. I think it's over 90% baked in right now with the probability. Okay, 94% probability that the Fed's going to raise rates 25 points in February 1st. And I wanted to finish my point. Sometimes this happens. I want to finish my point for the week going into February. We have FOMC on Wednesday the 1st. And then on Friday, we have non-farm payroll. So it's going to be a busy week. I'll run a bonus session there for Friday. I'll just run it here on YouTube and see who wants to join in. Hopefully everybody, but everyone from Flexed Equities on Demand to all followers on YouTube, I'll run a bonus session on Friday morning. So I'll start that session around 8:30, and we'll just jump right into non-farm, see if we can trade some dollar crosses. All right, but that's a couple weeks out. So until then, calendar-wise, we have 2 weeks, right? Potentially 2 weeks of melt up. So getting through today, if we finish green on the day, that's good. It's been nice to see green in the portfolio, no joke. I mean, every day my accounts between Schwab, Interactive Brokers, TD Ameritrade, they've all been green. Forex has been doing super well, and right now, just this week, I'm up like $3,000, and I've got positions that are running really well, plus positive rollover. No complaints on that side, and off we go. So for the first week back, it's been a busy one, but it's been fun. I can tell that those 2 weeks off, just mentally, I needed it. So I'm back and recharged and ready to grind all year. And let's make it a good year. Let's make it a great month. Let's make it a great quarter. Little bite-sized chunks, and let's see what we can do. Okay. If you do me a favor, hit the thumbs up button for me before you go. Like the channel, all that good stuff. I'll see you back here, youtube.com/Chris Pulver, Monday at 9 a.m. Eastern time. Let's switch gears to Equities on Demand, and let's wrap up the week. All right, everybody. See you. Thanks for being here. Bye.